And I think we are officially live. Another episode of Shut Up and Invest. We're going to give a few seconds for people to jump on live. And today we'll be talking about the update in the mortgage industry for both private money and regular residential, which affects investors who are trying to sell properties. And also, if you're just your traditional person looking to buy a home, which it completely goes hand in hand with real estate investing, whether you're planning to live in a property or if you're planning to buy a property, sell to someone who's going to live in it. But first, the man with the plan, Jay Money, what's going on, brother?
Hey, what's going on, Kevin, man? You got some Knicks colors on today. What's up with that?
We bringing basketball. We bringing basketball up. All right. This is the Columbia Professional National Soccer jersey, but
football.
Yes. Exactly. I do have the itch, though. I'm not gonna lie, for a little basketball in my life. So I like where your head is going with that. I heard that they're gonna do like a 20 team.
Yeah, they're doing some kind of 20 team tournament, I guess, small mini season in Orlando. I don't think we can drive up there and go watch any games, though. I heard it's like a bubble, Boy in a Bubble, the movie, like the whole 20 teams are in a bubble, just them, their families, and that's it. So yeah, you can watch on TV though.
That'll be cool though. That'll be cool. Oh, we got Knicks fans in the house.
Hey, let me tell you a story about Joe Ritchie, the Knicks, real quick, since he wanted to bring that up. I don't know if you know, me and Joe Ritchie go way back to high school. But I'm gonna tell the role what he did on NBA Live '97 when Chris Childs was like the greatest player in the history of live. So
we're gonna turn this into a gamer channel. We're going NBA Live.
Let's just say the sliders were increased. There was some kind of performance enhancing drugs with Chris Childs back in the day.
On the PlayStation.
PlayStation 1, Generation 1 back then, yep.
All right, I think we got a couple people now in here. We can get the party started. But before, man, I'm noticing your shirt. You want to give me a little preview of your shirt there?
Yeah, the shirt was done by my wife. I don't know if you can see it, but it's just a quote.
Put the camera down a little bit, maybe. There you go.
Oh, yeah. It says, I would unite with anybody to do right and with nobody to do wrong. Frederick Douglass, right? So, hey, that's where we're at right now. If you're on our side, if we're all on the side of right, we're with you. If you're on the song of evil or wrong, we'll see you tomorrow. Says the word. But my wife actually made a shirt for me, so she
I want one.
I got you. Yeah, I'll get one for you. So
I want one. You know what we need to do? We need to put up a Shut Up and Invest store.
Yes, we're working on it right now. Actually, I actually am working on it. So we'll have that done. Hopefully, done in the next week.
I love it. Yeah, let's talk about that once we're done here. But I want that shirt. 100%. That shirt is nice.
We'll get it out to you, man. I'll put an order in for you right now.
Nice.
So I'm gonna share that we're live real quick on Facebook and everywhere so people can see us, and then we can get into the mortgage update from our in-house lender.
Yeah, man. I mean, we got good news, so make sure you guys stay tuned all the way through. The banking industry are starting to loosen up. The private money is starting to come back. It is definitely conservative. I mean, it's not back how it was before, but we're seeing light at the end of the tunnel. We're seeing banks starting to get more comfortable. We're seeing private money starting to come back and say, hey, can we put these into safe investments, quote unquote safe, right? Mm-hmm. We're not as aggressive. Private money's not going towards the same after repair value that we were. So we're going to get into all those details today. We're going to try to keep it short and sweet for everybody on a Wednesday. We took last week off, if you guys were looking for us, due to the climate of the situation. We decided to let the voice of the nation be heard, and I didn't think it was time for us to come on and talk about anything else other than what everybody was kind of plugged into. It goes along the lines with what Jory's wearing right now, and I know Jory and his family took part on a peaceful protest organized with the cops and everything. You want to tell them a little bit about that before we get into the nitty gritty?
Yeah, we did. We took part of that protest last Wednesday, and I'm just thankful that we both are on the same page when it comes to any kind of, brutality and anybody, right? Police brutality, any kind of brutality, inner city violence, whatever it is. Me and Kevin both are out there doing what we can do to kind of, bring awareness and just kind of help people out. So last week we took part of a protest with a church, a local church, and the Broward Sheriff's Office and some local police forces up there. Where we actually did it was called Deaf to Racism. So it was a social awareness, COVID regulated protest. We were in our cars. Each car had a name of somebody that was killed to either gun violence or police brutality. And we drove through Broward County, right, with those names. And it was a long, long procession. The cops were with us the whole way. They blocked off traffic the whole way. They, rode alongside of us. So it was, everybody together, which was good to see, because you turn the TV on, you think everybody's fighting with each other. You think it's cops versus us, and there's bad apples on the cop side. There's bad apples on the, on the looters and the rider side. But what me and Kevin talked about last week was the majority of people all want the same thing, man, right? So we got to make sure that we're out there in the street, the majority, that we're making our voices be known, and that some real policy comes through all this, because protesting without policy is just empty, right? We got to really go out there. We got to change some of the policy. We got to change some of these people making the laws, right? We got to bring what we're doing right now. We got to bring group economics to the communities, and lift each other up. So we're trying to do our part.
Amen. And with that being said, if you guys are out here listening to us, or if you're watching the replay on YouTube later, we want to bring Shut Up and Invest and a lot of our teachings out to the communities that need it, the education factor. So we're looking to bring financial awareness, conversations like we're going to have today. We're looking to bring how to invest in real estate and how to be able to get into the game to these communities that really are lacking resources in education. We're looking to partner with local community outreach programs. We're looking to partner with churches. So if you're in your community and you want to organize something like that, doesn't matter what part of the nation, because as you guys can see, with the power of streaming and live Zooms, and we can bring this into a Facebook group. So we will be able to organize it to wherever you guys want. Reach out to us directly. Put us in touch with the community leaders that may be interested in this. And this is our way of just kind of bringing a little bit of our knowledge, where we could bring credit education, finance education, investing education. We even talked about some people in our networks that do family therapy and a bunch of resources. We want to put together a little summit for these communities. So if you're interested in that, reach out to one of us and let's really do something about it instead of just talking about it.
Definitely. That's the key point, man. Let's stop talking so much and actually, put some action behind the words. The talk is empty at the end of the day if there's no real action. So we're all about action. Hey, shut up and invest, shut up and vote, shut up and, activists, whatever it takes, shut up and do something. Let's go out there and do it.
Amen. Amen. All right. So let's get into the nitty-gritty of today's topic. If you guys are wondering, is it time to start investing right now? Let's preface this. I'm still standing on the ground of I'm not flipping properties right now unless I get a crazy deal, like under 50 cents to the dollar, depending on how much work is needed to the property. Do I got to get the city involved or not? That would be the only way I'd consider a flip. It would have to be ridiculously, priced, and it would have to be cosmetic for me to go into this situation. What do you think?
I'm with you. Yeah, I mean, I agree that way. I didn't like flips before with everything happened with COVID, so I definitely don't like them right now at all. So we're pretty much either taking the stuff down and we're going to wholesale it out, or we're going to do some kind of creative financing to hold on to the property. Is there an opportunity once in a while, like you said, a 50% on the dollar opportunity that needs very, very minimal that you can take down quickly and put back up? We'll look at it and give it some thought, but the rehab and flip market right now is a shaky market. Yes, houses are moving like crazy. If you talk to your local realtor, they say there's, they're jumping off the cliff. But you got to remember, there's a pent up demand of people who were trying to buy before March, right? Who were already locked in with loans, locked in with rates, who were trying to buy, then it got shut down immediately, right? So of course, right now you have low supply, right, and you have high demand. When that slows down, when that fades away, then what's going to happen? That's the uncertainty that we're dealing with right now.
Yeah, because what people need to understand is kind of the human psychology behind this, which does affect the money, which is where we're going to lead this to. Sellers right now are not putting their properties out on the market at the normal levels they were, because they're like, well, let's wait and see what happens. Now's not the time to be moving. A lot of people are still not comfortable to go shopping and go into other people's homes right now. There's still a lot of uncertainty. There's a lot of people that with their business model, they're not sure what's going to happen, what their income levels are. Is it completely hit 100% where they're not getting revenue, or did they just take a pay hit depending if they own their own business or if they work? I got clients right now that I'm doing refinances for that are CPAs that are in the medical industry, and they took 50% pay cuts, and now they increased them back to 25% pay cut. Guys, everything we're talking about right now affects the market, affects the money, affects the way the banks and private money make their decisions. So lack of inventory, like Jay said, because not every seller is putting their stuff out for sale like they normally were. But there's buyers that are like, hey, I need to make a move. I'll tell you what, if you are right now in a situation where you're like borderline just barely approved, you're that type of FHA buyer, or if you're in a real estate investor that has a property for the FHA market that you were trying to unload, you were flipping it, or you had it for a while and now it's time to sell it, you probably want to make a move now if you don't think by late this year, early next year, you're going to be able to be good with some liquid, with a good enough down payment, and your credit score is higher because you're not borderline anymore. So you got a few months to work on it. If you think, I just had this conversation this morning with a friend of mine, childhood friend. She's selling her property. She's relocating. They got a job offer to minister a church. Now, if she can get her credit scores up, they're going to have the down payment because they're selling their property here. So even if the market takes a turn towards the end of the year, which we'll talk more about in a second, and the banks tighten up like they did these last 2 months, we got a taste of the way the banks and how quick they'll react the minute they feel the economy's shifting in the wrong direction.
100%, we did.
So if she's going to be liquid because she's going to sell her house and she's going to have at least 20% down. That's a nice solid down payment, even if the banks get strict. Okay, now she's got to work on the score and get it up, because if they raise credit score requirements like they just did most of the time, most banks raised it from 580 FHA minimum score. They raised it to 640. A lot of them raised it to 660. And some just said, hey, 700 scores or more. Like, you have the big dogs like Chase and all those people that are like, we only want 700 scores and 20% down. It got to that level of, paranoia and tightening up because we didn't know what was going to happen. If that happens again, and the reason why I say is because, guys, we're floating right now on a lot of government-infused money in the market.
Yeah, people don't understand that. The government is dictating a lot of what's going on in the market, right? From the stock market, the bond market, everything going on right now is what the Fed does, right? The Fed makes an action, and right now every action they take is to keep liquidity in the market, right? They're doing everything they can to keep throwing money to the market, so the banks in turn can keep lending and keep doing what they want to do. If that stops at any point, you're going to see the economy fall down.
You're going to see butt cheeks go like this. Now, guys, the Fed is talking now. We got to pay attention. I'm over here basically stealing some of the Fed's limelight. As soon as I'm done here, I'm jumping on to see what they reported. The expectations is they're going to say, hey, all right, we're moving forward. We got policies in place that are going to help the economy. It's supposed to be light at the end of the tunnel. We'll see how it ends up once this is done. But what all this means, guys, is let's not completely think we're out of the dilemma. The reality is it's election year, which we've been talking about since this thing started. Government's throwing money at this situation. Forbearances got extended up to 6 months. And some lenders are even saying after 6 months, we will reconsider either doing a loan modification or another possible extension of 6 months. What does that mean? That means I don't got to pay my mortgage for 6 months, which right now we're looking at an average of 8% of the United States is riding this wave. 8% of the United States are not making mortgage payments right now. To be determined when it's time to make a payment, how they're going to modify these loans. Are they going to take those 6 months worth of payments and stretch them out for a year, 5 years, 2 years, put them at the end? We don't know yet.
And you know what, Kevin? We talked about this before on our show is there's already a backlog of people who modified from the last housing recession, right? Who've remodified once or twice because they couldn't make those payments. And then now they're going to modify again, right? So there's a shadow inventory out there of modifications that are kind of on the brink of just falling apart.
100%. So that could cause, guys, a lot of inventory to be thrown in the market, because if these modifications, people don't qualify for them, because now forbearance is very easy to get. You pick up the phone, you tell them you need forbearance, and they're pretty much giving it to you. They're not checking your tax returns. They're not checking your bank statements. They're not checking anything. That's how easy it is to get.
Wow. I didn't know that. Wow.
It's just, hey, I need forbearance. All right, cool. COVID. All right, sounds good. Click.
Wait, what's the password? I need forbearance. What's the password? COVID-19. There you go.
Now, guys, do I suggest you call right now and tell your credit lines that you need forbearance? The truth is, not if you can afford to make the payments. That should be last resort, because you're going to have to pay back that money at some point. So you're not doing yourself a favor putting it on timeout, because we don't know if they say, okay, cool, now you got 6 months to pay me everything back. Now what do you do?
Yeah.
If that happens, if the loan modifications don't work out, because at the time of loan modifications, I do expect them to go back to the 2008 to 2010 era and collect the full package to analyze before they adjust the terms that you can actually make the payments. I do expect that. I'd be very surprised if they don't do a thorough analysis before they make you an offer. At that point, depending on the people that can qualify for it, they'll get into a modification, which hopefully will be something that they can afford, and they'll be good. But there'll be a percentage of people that won't.
Definitely. Oh, yeah, definitely. You know, and like you said earlier, too, it's election year, right? So everything you're going to hear, like they announced a recession happened in February, that we hit the recession, but the same day or the day before, we're in the greatest economy that we've seen in forever, right? So you gotta watch who you listen to. The Fed actually tells you the truth if you can listen beyond what they're saying, right? They'll let you know if there's fear on the horizon, if they feel good, and then read the numbers. Just like in football, the film doesn't lie. Look at the numbers. Unemployment numbers are high still, right? We just did a house that we sold and started financing in PA. I never saw these many applicants who were on unemployment, right? There's a lot of applicants who are on unemployment. So in our underwriting for these buyers, we have to go super, super deep. Okay, what industry do you work in, right? Are you working in this industry, which we feel is not coming back? Okay, I don't know. You might be on unemployment for a long time, right? The industry that was just short term, where they're going to have a job again, okay, then we might push you through. So we got to be very, very careful. There's still deals out there. We're still buying deals. We're still making deals, but you got to tread very, very cautiously and look underneath everything that's on the top of the level and see what's actually going on.
100%. And I'm glad you brought up unemployment, because I've been getting a lot of questions that if I'm getting unemployment, can I still qualify? Both private money and traditional banking are not going to give you a loan unless you find a real crazy private person that's got money and says, okay, cool, but they're not going to give you a loan if you're collecting unemployment right now.
I can agree. I can second that, because like I said, we had about 8 applicants in one house, and the 2 we narrowed it down to were the 2 who had, still to this day, steady income that didn't break up and it was unemployment, right? The other ones we saw unemployment, said we got to put that to the side.
Right. The good news is, right, because we're not trying to make this gloom and doom. We're just bringing awareness, guys, to make sure you're investing and the moves you're making in your business and the moves you're making in your financial life make sense. So you kind of have a full picture. Here's the positive side. They changed the guidelines where normally if you went into forbearance or you had, a troubled situation like this, you'd have to show that you recovered and made 12 months of on-time payments and that you don't owe anything to anybody anymore as far as back pay, right? You caught up and you've made 12 months. That was the traditional guidelines. Now they've cut it down to 3 months. So you need to catch back up. So if you take 6 months forbearance, you need to catch back up and then make 3 on-time payments, and then you can buy again, refinance, or do something else. So they're making the guidelines a little bit more customized to the current situation. But regardless, catching up on 6 months is not easy if you've taken a financial hit.
It's not. It's not. And we already know the majority of homeowners in America's savings is not at a high level, right? A lot of people live in paycheck to paycheck. So, that's going to be pretty hard to do.
Right. So now we know that if you're collecting unemployment, to be able to qualify to buy something, you just need to show that for 3 months, that's also a guideline, you've been able to recover. So they're going to check your your bank statements and pay stubs. And if you're self-employed, if you're a realtor, if you're an investor, they're going to ask for the last 60 days to 90 days of your bank statements. And they want to make sure the revenue that's being deposited in the bank statements is matching what you're saying you average make per month. So if you say I make $10,000 per month, but in the last 3 months, you've only deposited $3,000, they're not going to go for that. And this is both in private lending. Private money's looking at it this way, and traditional money's looking at it this way. Banks are looking at it this way. So this is something that you got to make sure you keep in mind, because the guidelines have customized due to the current situation. They're treating self-employed, which means realtors and investors as well, very cautiously, because we still don't know if in the fall flu season comes back, COVID jumps back up, hospitals get packed again, and everybody stops going back to restaurants, the beaches, everything that people are kind of doing right now. Venturing out. What if we all pull back? Not even because the government orders us, but at the end of the day, if we start, which we're seeing it in different cities, pockets announcing that their hospitals are getting full, if that starts to happen a lot, naturally people are just going to stay home.
Yeah, it's just human nature, right? We're going to react the way that we react. Definitely.
Right. You can definitely ask a question, guys. This is Q&A, so at any point, go ahead and send over your question, and we'll cover it 100%.
I got a question real quick. Well, were you finished? We're going to finish something about that?
No, go ahead.
Okay. The institutional money, the hedge funds, all these good, loan programs that were fueling the rebound in the real estate industry the last, 5-6 years. Right. What's going on with that right now?
Okay, so what he's talking about, for you guys that are joining us, is we had a lot of money, a lot of private money, which made it very competitive, and it was going great. Basically, if you found a good deal and you were looking to flip a property, you can find plenty of people in there. I mean, private money got as cheap as 7 to 8% because there was so much competition of money out there, and they were funding, up to 70% of whatever the final value, the after repair value of that deal was going to be. And some people were even stretching to 80%. I saw it get that crazy, and with as little as 10% down. So there was a ton of money in the market. A lot of hedge funds put money together, and they were coming into the private money world, partnering with companies like us and really bringing in a ton of private business, which was great for the real estate investing market, great for the flipping market. They all pulled back once things got crazy. So now you're slowly starting to see a few of them trickle back in, and they're being a lot more conservative. So first and foremost, they're now adjusting most of the time to 65% after repair value.
Okay. So that's the first adjustment. And they're doing that because they're anticipating that the value is going to come down a little bit.
Correct.
Sounds fair.
So right now they're playing at 65%. And instead of 10%, they want at least 20% down if you have experience. What they want to see as far as experience is that you have done real estate investing for at least 2 years, and you got at least 3 deals or more under your belt, meaning whether you're buying and holding or you flip the property or you're in the middle of one right now, they want to see that you're associated with at least 3 deals over the last 24 months to feel comfortable for you to put at least 20% down. If you don't have any experience, there's still a couple people out there that are willing to consider the situation if the deal is good. They want to see a nice profit margin on these deals. These deals that are super tight that, I'm going to make, 15 grand, 20 grand. They're not going to go for those type of deals because in any shift, now you're stuck with the deal. And what's your exit strategy?
Got it. Perfect. All right. That makes sense.
Now,
they ride the wave when the wave is going up. When it starts coming down, they're going to tighten real quick.
Right. So as far as points, they're charging more points because it's more risk for them. Hey, at any point, if we all decide to stay home because COVID starts to go crazy again, in the near future, if the economy starts to feel all the unemployment after this forbearance and prices go back down, all that is risk factor for any lending hand, whether it's a bank or it's a private money. They're all looking at it like, what should I be doing here? So if I'm going to take the risk, the 7 and 8% rates aren't there anymore. They're now 10, 12, 14, 15%. And getting the deals done at 1 or 2 points, unless you have a personal relationship with someone and you negotiated these terms and you're a golden goose for them and you built that know, like, and trust, and you got a custom negotiation, which I'm not saying is impossible. We're out there building these relationships ourselves. But I'm talking about in general. What you're going to find in general, you're going to be paying 3 to 4 points on the money. That's 3 to 4% on average, sometimes more on the money that you're borrowing.
Got it. So, which gets us to another point, which we'll talk about, another show because we have questions coming in. But that tells you why it's so important right now to go out there and find some private money lenders, right, who are in your phone, right? The people in your phone that might have the 50, the 100, the 150 down that they'll give you to loan out. So
100%.
go out there and find them.
All right, so we got a question. Seller wants $125,000. The house needs some work and it's free and clear. How do I approach him with an owner finance deal? Also, would owner finance the property to a buyer? Is that it? Also, I would owner finance the property to a buyer. Is that considered a wrap? That's a great question.
Yeah, I don't know. Can we bring? So definitely, if you buy it on terms, right? So if you buy it and owner finance it, and you sell it on owner financing, you're wrapping it, right? All a wrap is that I have seller financing terms with my seller, and I go ahead and sell it to another buyer with seller financing terms. That creates a wrap. So yes, that is a wrap. What was the rest of the question? Some of these questions we might need to bring them on, Kevin, so they can kind of give us more information. I don't know if
you're challenging me live on my technology skills.
I don't know if you figured that out yet, but seller wants $125,000. House needs some work and it's free and clear. So, I mean, again, the way you approach someone in the seller financing offer is, and we've talked about this. We just asked them, right? We asked them, would you be open to taking seller financing terms? Now, it's hard for me to actually tell you what kind of offer to make because I don't know anything else about the house. I don't know what the house is worth. I don't know what you can sell it for and that stuff. So that's kind of hard for me to do. But I would say to the seller, Mr. Seller, I know you want 125. Would you be open to taking a seller financing offer? This way, when you sell that property that's free and clear, you're not going to get hit with a huge tax bill on the sale, right? You can kind of defer those taxes to down the road. And this way I can show you a way where you can make some residual income. You'll get a down payment up front, right? You'll no longer be a landlord that has to deal with tenants. You'll get some income, but we'll take on all the liability. You'll save on your taxes, and it'll be a good deal for both of us. That's how I would approach them. But, I need to figure out exactly what you can sell that house for to kind of help you out on what kind of, offer you should make.
I think I figured out how to be able to get them to join.
Oh, yeah.
So I just posted the invite link, guys. So if you guys want to come live and have a conversation live on the show, in the comments, I just posted the link where you can ask. I think that's the way to do it, because then they'll appear down here and I can add them to the thing. So we're on the fly here trying to get you guys on board. I like what she's talking about. That is where you guys should be approaching all your deals, because we're talking about mortgages, we're talking about private lending. The truth is, if you can negotiate one-on-one directly with the seller and you're your own bank, now
definitely
you got the power on the deals. You're controlling your own economy, which is great. Now, I would suggest you take some of the signals that the banking industries and the private money are doing and follow suit. Like Jay was talking about earlier, he's looking at what type of industry they're in when they're applying for the deals we got. We're asking for bank statements. We're making sure they got reserves in their bank account. We're not taking them if they're collecting unemployment, because what happens when unemployment runs out? So even when you're doing these wraparound deals and these creative financing deals that we talk about on the show all the time, you got to still be careful and follow kind of the same principles that these banks are doing. You don't want to just say, I'm selling this house for $125,000. Come in here, just give me $1,000 down, and I'll give you these terms without doing your due diligence.
Definitely. You want to get 10% down minimum on every deal that you sell it for. What Kevin said is so key about bank statements. Right now, we're collecting bank statements, 2 recent pay stubs, right? But those bank statements have to go back. They have to go back a few months, because think about this, guys. A lot of people have money in their bank account right now from stimulus checks. And you're seeing the stock market go crazy high because people got stimulus checks. They're sitting at home buying stocks. The same thing with us, right? I'm not going to sell a property to someone who has $5,000 right now today because they got a stimulus check, but they've never had that before, right? Or they don't usually have the amount of money in their account to cover the bill. So you got to actually look deep into the details of people's finances right now, because there's a lot of stuff going on that you need to be aware of.
100%. So we got another question. Let's bring him on. So he's in the Florida market. Jay, what's going on? And I'm coming across a lot of older sellers willing to owner finance their 55-year-old plus properties. This is what he's talking about, guys, is that these 55-year-old communities, you got to be at least 55 years old to be able to buy or somebody on title needs to be at least 55 years old. What are your thoughts on these properties? And appreciate you guys doing this weekly. Well, we appreciate you, my brother.
Definitely. I'm all in on 55 plus because they are the largest demographic population in the country, right? And we did an episode on assisted living facilities. Me and Kevin did with my buddy Jamie Baker. We actually just posted that video yesterday. The video was hidden somewhere, locked up. We found it and we posted it. A lot of the 55-year-old before, they were going to these larger residence, rehab, nursing home centers, whatever you want to call them, right? The big box centers. Those centers took a disproportionate amount of people in those centers caught COVID, died from COVID. I see it trending to where you're going to see more of these small residential facilities become the norm for people when they get older, right? These neighborhoods, like the one you're talking about, is going to probably be prime for a lot of these baby boomers, right? And if you can offer those homes, if you can get them a seller financing and then offer them a seller financing or sell them cash or sell them conventional, however you want, I think that's an amazing, amazing niche market that you could be in the near future. Send me some of those if you got some too.
Yeah. And listen, the 55-year-old communities, not all of them are easy to finance, depending on what their community association guidelines are, because the banks want to take a look at what the association rules are, what kind of agreements they have, and they're actually considering that just as much as they're considering who the person is and who the borrower basically qualifies for. So if you can get deals on seller financing in these communities and you make your own rules, with protecting the bank, you're always going to protect yourself and do the things we're talking about. But I really like that. Now, 55-year-old communities, remember, a lot of people have cash at that age. So there's a lot of cash deals there, but you adding that extra layer of, if you don't have a cash buyer, you can give them a portion of it. A lot of them will come in with a big down payment, 50% down, and then you can seller finance the difference. So that's even better for you. If you're going to be your own bank and you're doing seller financing, what's a good down payment? That's a good question. Well, the more skin in the game the person gets, the mentality you need to have is, if I make you put as much money as possible down, you're probably going to do everything possible to never stop paying that mortgage, because you already invested $20, $30, $40, $50,000 or more. So the more that they can put in, the better it is for you, because that means they're going to do everything in their power not to lose that investment. That's kind of the mindset behind down payment.
And again, you've heard me talk about my favorite list to hit up when I'm looking for seller finance deals are, right, those investors who have owned homes for 30 plus years, right? They're 55 plus years old. So, a lot of that demographic, they're trying to find some fixed income. They want to retire and they want to get fixed income, right? So that's why you'll probably see a lot more of them open to doing that seller financing terms.
Yeah. And then, guys, here's a little hack. If you are buying one of these properties for anybody, if they're walking out with cash in hand, have a conversation with them of what they plan to do with that money.
100%.
Where do they plan to invest that money? A lot of the times, having that conversation at the closing table or even prior, you can actually find someone that may say, you know what, I don't mind reinvesting this money because I was just gonna, and then depending on what their answer is, you might have a better opportunity for them. They might actually consider financing, maybe not that deal, but another deal for you. And then you have now a private lender. That's not a traditional private lender. This is a guy you just did a deal with. You obviously now know he has money now. And unless he's got a good solid plan of what he's going to do with that money, he might be interested in getting a check without the headaches of being a landlord.
Yep. Key. We've done that in a few deals recently that we've had. We've gone back and asked that question. And now we always ask that question to our sellers, right? When we close to get the money, what is your plan with that money? A lot of sellers want to reinvest that money somewhere that they know is a solid investment. And who better to have trust in than the person who just closed on the deal and performed the duties they said they were going to do?
Yeah, 100%. Jay, definitely send us any deals. And I wanted to point this out for anybody listening. We're right now looking at a deal in Pittsburgh. We got another deal that we were looking at yesterday. Where was it?
Kansas City.
So our listeners are reaching out. This is the point of the show, guys. We're giving information for free. We're offering value. If you guys see here at the bottom of the video, go to shutupandinvest.com. Our free real estate training course is being put together. You will get blasted. That as soon as it's live, sign up there. And within the next week or two, we get a free completely video training course that shows you everything we do to generate opportunities and good deals and how we speak to them and all the basics of being able to do real estate investing all over the nation. And the reason we do this, guys, is because the more you guys know, then the more business we can all do together and the more we can increase basically our financial future. And together as a community, we uplift. A lot of the problems you guys see right now going on in the nation is lack of resources, lack of education, and lack of community. That's the point of what we're doing here. And we wanted to give you guys an update on how the money is in the pandemic, but continue to share information because I know that's the goal between here, me and Jory, to really bring awareness and be able to do deals together as a community, because that's going to really change everybody's situations.
100%, man. 100%. Lack of education, lack of resources, what we're seeing right now. And if we can all help each other out, we can change communities wherever we're at. We all get to eat. So definitely.
All right. Again,
any more questions out there, guys?
What happened?
I'll just see if there's any more questions. Is that the last question we have from Jay?
Yeah, that's it. I'm going to reiterate because now we got a lot more people watching. Guys, in your communities, talk to your community leaders, talk to the churches, talk to the organizations. We will do live summits for a day or two, bringing credit education to your communities, real estate investing communities, how to just buy a house that you want to live in, all type of financial education resources, how to get in to do what we're doing. That's how we feel we're going to make a difference. So if you didn't hear us in the beginning, reach out to us. We will definitely do these. With technology, we could be anywhere in the country. So reach out to us and let's put that together. That's how we feel we're going to be able to really change things.
we got 2 more questions real quick. So she missed the answer to her question. her internet went down. Yes, it's recorded. You can kind of find it on YouTube. Also reach out to us if you want to talk to us about some more specific details about it.
Yeah, we'll give you the Cliff Notes version here in a second, but let's talk about what Joe's asking us here. Are multifamilies, are they good deals right now?
So one thing that you're going to see a lot of right now too, there's a lot of multifamilies, right, that I'm seeing way more multifamilies being available to buy right now than before. And that's because a lot of investors who own them, right, if they have any kind of sense of the market changing, they're trying to get out right now, right? So there's a lot more deals on the market as an investor. And you got to be careful not fall into a buyer trap, right? What Kevin's been talking about this whole time is we had some bad news, right? Then we had the government come in and bring a lot of money, right? So they get their hopes up again, and then what's really happening is going to happen down the road, right? So you don't want to be caught in what's called a bear trap if you look at the stock market. So multifamily deals are good to buy, right? They're always good to buy if you buy them right, okay? We did a special on why new investors should invest in notes. The biggest fear I see is when a new investor with no reserves buys a multifamily, right? And 2 months down the road, 2 furnaces go out, they can't fix it, and now they're stuck, okay? So one thing that me and Kevin always talk about, if we buy a multifamily, we want to go into that multifamily and fix it up to the T so that any kind of huge repairs, capital repairs, roofs, furnaces, water heaters, electrical. So all that stuff is done when we buy it so that we don't have to worry about that, 1 to 2 years down the road. Because the main thing with multifamily is just worrying about the repairs, right? It's easier to fix one house than it is to fix a 4-unit. A 4-unit takes a lot more money.
Right. But the cash flow for multifamily is the reason why they're so attractive, and they are a great deal. So to answer your question, yes, but what Jay says is super important. Make sure you cover the reserves to be able to handle any problems. And if you have the money to go in right from the beginning and do everything necessary, even better. Now, I'll tell you right now, look, my brother, we talked about this deal of probably like 6 months ago. He bought a multifamily here in Miami. He lives down in California, and it was completely renovated, but it's real estate. The insurance company came out, and there was a couple shingles missing from the roof when they did the inspection after he closed on the property. The inspector missed that when they went up there because there was a section within the tilt of the roof. So they said, you need to repair these shingles. $1,200 to do the repairs there. So that was money that thankfully he had, and he was able to put into it. Now, 4 or 5 months into owning the multifamily, termite situation. Okay, $400 to treat the termite situation. So even if you got it fully repaired, my point is he had to clean the AC, the coils, and everything yesterday. $185. So there's always small little expenses, even if you completely renovate it. Reserves is key, but the cash flow that he's making, and even if one person got affected by COVID, which one of them did, the other unit kept paying, so he didn't take a hit on the complete mortgage situation. And now that person is catching up, so he's back to cash flowing. So those are the benefits of having a multifamily 100%. Now, how do we structure that deal with the multifamily? We treat it just like any other deal. At the end of the day, don't get caught up on, is this different because it's a different type of property? Remember, like when I go into, and I don't know how your mindset is, but my mindset is we're people, we're human beings, and we're talking about you have something that I want to buy from you. So let me figure out what your motivation is. Let me figure out what your plans are, and let me figure out how I can structure a win-win situation for the both of us. It doesn't matter to me if it's a car, if it's a condo, if it's a house or a multifamily. I'm not getting caught up in that. I'm looking at it always with that same exact mindset.
Yep. You got to evaluate the numbers in the multifamily, all of the numbers, right? We did a special on how you evaluate real estate rental deals, right? In the multifamily, evaluate every number, the cash flow coming in, every expense, vacancy, repairs. Get to that number, get to your cash flow, right? And account for the rainy day, account for the vacancy. If this person's not here, can I keep making this payment? Or if you're free and clear, can I handle my cash flow being done? But, you're going to structure the same way you would a single family house, or if I bought Kevin's hat from him for $5, right? I'm going to structure the same way.
$5. Come on, brother. Let's start putting let's start putting a little value to the situations.
I don't wear hats. That's why I still have a lot of hair.
The problem is, with this pandemic, I got way too much hair, my friend. I haven't gotten a haircut and worn a suit in like 4 months. I'm having withdrawals over here. All right, so we got Tyrone. My brother is asking, how much on average do you commit to sellers as a down payment, percentage-wise, for seller finance deals? So us as a buyer, how much are we giving as a down payment if the seller wants to offer us seller finance deals? It's a very good question.
It's a very good question. And 10%, I usually am always at 10%, right? Some sellers will ask for more. A savvy investor will ask you for more. But I'm going to offer 10%, not lower, not more. My offer is 10% and see what they say.
Yeah. Now, just like when you're negotiating for the price, let's see what they want.
Well, that's key, Kevin. Yes. Before I say anything,
at the end of the day, if you get a seller that says, hey, you know what? If we just want to finance it, cool, pay me per month, and he asks for no down payment, which happens. Listen, trust me, it happens. So the same mindset that you approach to try to get the price, that you're basically waiting to see what they want, approach the down payment. Now, the limit that Jay's talking about is let's try not to go past 10%.
Definitely, yes. But there's especially sub 2 deals. Sub 2 deals, we get into sub 2 deals all the time without any money out of our pocket, right? So there's a lot of situations where there's zero money down. But yes, there's a limit to what I want to put down ever, and mine is 10%.
Yeah. So get the number from them. Yes, but you'll have certain people that'll say, okay, let's just structure it per month, and they'll ask you for less than that, if sometimes not even. So do everything you can to dance with them. It's like a waltz, right? You're going to sit there and you're going to dance with them until someone's giving a number. It's either going to be you or it's going to be them. And if you look at it that way, keep dancing until they give you the number. Well, how much do you want? How much do you think we can make this happen? I got to do some repairs. I definitely want to put some money into this property. So I'd rather put as much money in here and be able to pay you per month. You start dancing that way, they'll be like, well, you know what? Let's do this. Pay me this. And then hopefully that number is sexier than what you were willing to give anyways.
Yep, definitely. Another question.
If a deal does not cash flow, but the owner agrees to creative terms, what methods do you use to find a buyer pool that will pay you a higher down payment so you can wholesale profit from it? You want to talk about the Green Street deal?
Yeah. So let me ask the question. I wish you could get him on here to get the exact details on this, because does he mean it doesn't cash flow right now? It's occupied doesn't cash flow, or it doesn't cash flow in the terms you get it? You get it because, there's ways to make a deal cash flow. But yeah, we can talk about that deal.
Well, if a deal doesn't cash flow, for those of you listening, he's probably saying, okay, the person wants $1,000 and he feels that in the buyer's market, you can only get $1,000 per month. So instead, he wants to just wholesale it away and have someone just straight buy it. Correct? Am I understanding that question correct? So if that's what you mean, that you can't sit there, turn around, and get someone to pay you more for that. So it's $1,000 for $1,000 in the market. So number one, depending on how much money you're going to have to put down, let's say that seller says, okay, cool, give me $5,000 down and pay me $1,000 a month. And then you're thinking to yourself, all right, the most I can get buyers to pay me on seller financing on this, or even a lease option to buy, is $1,000 because that's what the market max is.
You're talking about the monthly payment.
Right.
Okay, got you. Okay. And he's trying to wholesale that.
He's talking about, right, if it doesn't cash flow. So let's say it's dollar for dollar there.
Got it.
Guys, instead of buying this property with a bunch of money out of pocket, if I still feel there's profit to wholesale and flip the contract or flip the deal, I may agree to that and not have to put a lot of money down while I find a buyer that can then pay me off and take over and take the profit. So the most minimum that you can come out with out of pocket, if you still feel there's a profit margin, it's still a deal.
Yeah, because maybe it doesn't cash flow, right? It doesn't cash flow, but you might find a homeowner, right, who can wholesale it to, will put 10,000 down, right? If they put 10,000 down, because let's say you buy on terms and you tell them, hey, look, you get the same terms that I get. I'm doing this right now. There's a deal. I'm giving the guy to the same exact terms that the seller gave me, right? But I'm charging him a $5,000 assignment fee, right? So I'm basically transferring the seller finance terms that I got from my seller to another buyer, because it only works for that buyer to buy the same terms I got it for, but he's going to pay me $5,000 as an assignment fee, not an extra down payment, because if it's not going to go to down on his balance, it's an actual assignment fee for me selling the contract to him.
Right. But yeah, and what methods do you use to find a buyer pool? Okay, so let's talk about how we market that property. So, for example, we had mentioned a deal. Within our network, someone on our team wants to buy a deal. So first and foremost, don't always think that you have to go out and find a brand new person. It's like anything. You treat every deal exactly the same. You tell your team, you tell every realtor you're connected with in the area, you tell every family member and friend, you post it, which we have all these different places on our training that you guys can sign up with, but you post it in the Craigslist, the Facebook marketplaces, you go to the local real estate investor association meetings, you post this everywhere, you blast it everywhere, you tell everybody about it. And if you listen to one of our first ever podcasts, the Miami Mike one, you'll see, which is a great show. You guys got to go back and listen to it. It's on YouTube. He never judge a deal.
Exactly. I was going to say that too, because listen, it might not cash flow. It makes sense for you, but for another person to buy that deal with, let's say 15 grand down, instead of having to put, 50,000 cash for the property, it might make sense for them. A lot of people look at the cash on cash return, or how much cash do I have into the property, or can I get into the property with this, fix it up, pay that mortgage down, refinance it in a year, right? So there's other options that might appeal to them that doesn't make sense to you on paper. So just throw it out there. If you get locked up in terms, lock it up, throw it out there, see what you get. And another thing too, never advertise the down payment, right? So if you have a seller finance deal that you're selling, don't advertise the down payment, right? Just put it out there with the terms, the payment, and then let them tell you what they have for a down payment, and then ask for more, because they're not going to tell you all that they have, right? Let them tell you, hey, I got 10 grand. Okay, well, we need 12.5, and then see what they say.
Yeah, 100%. For the earlier question, Miss here missed it because her internet went down. For those of you that are just tuning in, she was asking that if she got a seller to sell her on what we call seller terms, meaning no banks involved, the seller says, pay me per month and I'll be the bank for you. That happens all the time. Mm-hmm. That she wants to turn around and sell it to someone else on the same terms. Is that considered a wrap? That was the question, which definitely is what we do. That's how we do it. You got to double check with your wherever area you're in, your real estate attorney, and make sure you understand the legal ramifications of how that works. What was the other part of her question?
She said that how do I approach him with the owner finance deal, right? Seller wants 125,000, house needs some work and it's free and clear. How do I approach him? So I said the first thing you want to do is listen to when he talks, okay? Because there's certain keywords that the seller will say on the phone call that will tell you that he's open to a seller financing deal, right? If he mentions that he doesn't want to pay a huge tax bill, if he mentions that he's tired of tenants, if he's mentioned that, hey, it makes good money, but, I'm just winding down my portfolio. There's certain terms they use, right? If you hear those, and jump on it. If there's not, you just ask. I simply ask. When I figured out the power of seller financing, I simply ask every single seller if they're open to taking seller financing terms, right?
Yeah.
And some might not know what it means, and I'll explain it to them, right? Some might say no, they might have had a bad experience before, and I'll still explain why they should do it with us, But the key and the proof is just asking them, right? And hearing what they say.
Yeah, I think a lot of people, they're so scared of rejection. I was working with one of my agents yesterday, and we were going deep into the mindset of fear of rejection.
Mhm.
And the no is not gonna kill us. So let's not be scared. And a no doesn't also kill the deal.
No, not at all.
So hearing a no just means, okay, let's try again with something else.
Yeah.
So let's not be scared to ask. Let's communicate. Let's not be worried if the client or the seller says, this is not what I was thinking. I'm looking for this. In fact, the no's get you closer to what they do want.
Mhm.
So get
Exactly.
past the no's and find out exactly what they want.
Yep.
We appreciate you, Ms. Here. And Tyrone, thanks, fellas. Appreciate the show you do trying to implement these ideas in the Cali market. We appreciate you guys. Definitely let us know if you need any help on the deals out there in Cali. Reach out to us. We'd be happy to take a look at it. Cali's a great market because there's usually margins and profit in a lot of the deals out there.
Yeah, definitely is. Cool, man. Well, I think that was a good hour. Went over some good stuff. Updated them on the market, the mortgage market, the private financing.
Every time I say let's do a quick 20-minute show, it turns into an hour. But we appreciate you guys.
Definitely.
This is exactly what we're here for. So it doesn't matter. We'll be on here for 2 hours, 3. I don't know if I'll do like Pace where he did 24 hours. But
no, he didn't do 24 hours. He's doing 24 hours in 2 weeks.
Oh, is he? What did he do that?
I'm actually going to be joining him. I'm going to be in Phoenix that day. So I might be on there for a few hours. We'll see.
Check this out. Hugo giving us the update. I was about to jump off. They just announced that there will be no raising interest rates all the way through 2022.
That's the first time I've ever seen them go that far down the road to announce that. That's pretty interesting.
That right there, guys, like what Jay was saying earlier in the show, that right there tells us that things aren't, hey, let's go back outside and everything's good. Let me start flipping properties again. Let me go out and buy property like it's no big deal. That means what they expect to come is not going to be nice and easy as far as the economy, the prices. There's a reason why they're trying to put that type of confidence out in the market, because right now we're hurting.
Yeah, that's the thing. And you'll see a lot of people go crazy. The stock market's going to probably go up on those things. Understand something. The stock market going up does not correlate to the real economy going on, right? The stock market is just playing the Fed right now, right? When I heard the Fed say, I think it was 2 or 3 weeks ago, that they would explore negative interest rates, I knew right then that what they see coming is not a really good picture. And I just finished reading a book called Fed Up, which is a really good book if you guys can get it. It's called Fed Up. It's from Danielle DiMartino Booth. She worked for the Dallas Fed for years. She was there throughout the whole housing crash. And she goes deep into what the Fed says, what the Fed means, and how the Fed actually keeping rates as low is not a good thing for the health of our economy future-wise. So, I mean, play the Fed the way you can. But to say 2022, it means that they don't see much growth until 2022 in the economy is what that means.
Right. Which affects, for example, Hugo's asking, what are our thoughts for the upcoming foreclosure wave? That's the fear that everybody has. If the economy falls into a depression, if people can't start making their payments, if COVID spikes back up and people choose to stay home, and listen, I'm in the middle right now of not going outside and going to restaurants. I'm not choosing to go into any crazy crowded public places. Mm-hmm. It's my choice of just seeing how things fit. I got one of my best friends at home. He got hit with COVID. He's right now going through it. He's got his elderly mother at home. He's got his wife and his daughter who are now starting to feel sick after a week of him going through it and he tested positive. They're going through it. I'm telling you all this to tell you that, do you think he's going to be going outside spending money in the economy anytime soon?
Yeah,
he's going to protect
definitely.
his house until everybody's back and healthy. He's not going to go into any public crazy places. So we're still going to, I mean, if you shut down the economy for almost 3.5 months, there's going to be a major ripple effect. So foreclosures are definitely on the horizon. We just don't know how bad it's going to be.
Yeah, definitely. Yeah, we don't know how bad it's going to be, and we see already at the banks and the Fed are trying to do everything they can, to protect it so it's not like last time. So sorry about hearing about that. My wife's father passed away. Yeah, me and my wife's fathers both passed away during this whole pandemic. My wife's to COVID, mine not to it, but we know how you feel because that was tough for us to be able to be locked in the house and not be able to even attend a funeral. So we definitely feel for that for you out there.
Yeah. And that's why the uncertainty and the what the Fed said was trying to bring back some confidence and some certainty. They're trying to let you know from now till 2022, the rates are going to be low. We're going to do what we can to try to make this economy recover as fast as possible. There's still the health issues out there that are keeping people from going out there and doing their thing. There's going to be an adjustment to the market and to the pricing. How much and how bad? That's what we're keeping a pulse on. That's why we come in here weekly. That's what we're looking at. We're still doing deals, but we're definitely keeping in mind. I mean, we were looking at deals yesterday and we were talking about, all right, if we finance this deal at 5 years and they have to pay us back, where are the values potentially going to be in a year or two? You know what? Let's give them 5 years. That way there's more time, because traditionally we would have gave them a year or two. But now let's give them 5 years, because a year or two, based off what the Fed just said,
yeah, I know. It's not going to be good, right?
It may not be. The values may not be there to be able to refinance or sell to pay us back. So if we give them 5 years, now we're giving them a lot more years. We're going to collect interest and be the bank. So these are the conversations we're having on deals all day long, just to kind of give you guys insight.
Yeah, and it's not doom or gloom. I mean, we're going to buy through the recession, through the depression. We're just going to evaluate every deal a little bit differently, But I think because, we kind of feel the responsibility because we've been here, we've been through the last one, we've been seasoned investors, to not just be like everybody else saying, oh, it's beautiful outside, oh, no problem, greatest economy ever. Me and Kevin can kind of feel something in our spidey senses that there's some other stuff going on.
Yeah.
Thanks, Hugo. Thanks, Monsieur. I appreciate that. So,
all right,
man. Thanks, guys. Hugo's, send us some information, Hugo. We definitely are.
1,000%. 1,000%, guys. This is a community. Join us on the Facebook group. We're going to be doing Mortgage Mondays inside the Facebook group. So get your Facebook account. Look for Shut Up and Invest. Not the page, but the group. Like the page. But then go into the group. Join it. We'll let you in. It's free. We're going to be doing Mortgage Mondays specifically in the group. That one, we want the group community. We want to have conversations like this every single week, every single day. When you have deals and you're not sure about it, post it in the group. We'll do our best to go ahead and jump in there. And every Monday, we'll be talking more about the money, raising money, the banks, and these type of conversations. So this is a preview of what Mortgage Mondays will look like inside the Shut Up and Invest group over at Facebook.
Got it.
All right, my friend. I think we're done for the day. And to the next episode.
All right. See you guys. Shut Up and Invest.